You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back for the Thursday edition, episode 2 of the Option Block, your bi-weekly options palooza. My name is Mark Longo. I will be your host, your guide through this rolling options festival of madness here. Of course, if you do like what you hear, and clearly a lot of you do, November, like we said, just a bonkers month here on the network for all of our shows, including the old OB. If you do like what you hear, do keep rating and reviewing. It clearly has an impact on your fellow listeners out there. In fact, we've been mentioning reviews on a lot of our other shows. We don't really spend a lot of time highlighting them on this show. This show's been running for a long time, so maybe we should. So let's look here. PLJ 2021, that's their handle. This comes from Apple Podcasts, looks like. 5 stars. They said, great show, informative, educational, and entertaining. Wow. Highly recommended for new and experienced options investors. Well, thank you, PLJ 2021. We appreciate you and everyone else who takes the time to rate and review the show on whatever platform you get it on. Remember, if your platform doesn't allow ratings, then of course you can always head on over to the App Store, iOS, Android, however you get our network app, and leave a rating there. That always helps people discover the content as well. And speaking of discovering content, I went and checked the Pro podcast feed the other day. It's got nearly 200 episodes on. There's a lot of Pro content you can discover for yourselves, listeners, as well as, of course, participate in our awesome Pro Q&As. We had double Pro week going off for you folks again this week because we like you folks. We had, of course, Mr. John Smolin joining us out there in the hot seat yesterday, talking about some interesting stuff, talking about some interesting options, conspiracies, all sorts of fun. He's got a long history in the world of options, of course. Coming up later this week, I do believe for double Pro week, we're going to have the Unclist of Mike's joining us in the hot seat as well. Where can you get access to all that good stuff, as well as, of course, everything else on that Pro podcast feed, as well as the giveaways? December box going to be going out soon to one of you lucky players out there, as well as, of course, everything else there, live streams, all sorts of fun. TheOptionsInsider.com/pro is the place to go to learn more. And let's see who's joining us on the program today. First, let's go out to the sleepy, the tranquil hamlet known as St. Charles, where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to ye old program, sir.
Always happy to be on ye old program, especially on a day when the markets are just racing higher today.
Yeah.
Wait a second. I'm sorry. My computer's upside down.
I think you have your screens upside down. Did you turn your screens upside down again, Uncle Mike? You always have that problem out there. And let's also go out now to the land where everything is dark and stormy and his technology never works. So it's a 50-50 crapshoot whenever I toss it out there, listeners, that he will respond. Let's see if he is there now. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, coming to you by way of a tin can and some string. Mr. Rock Lobster, can you hear me, sir? Are you there?
I think I can hear you. Can you hear me?
We can. The donkey cart, the string, it's all working, sir. Keep it up.
Yes, the string is working. There was a clam pirate this morning. The weather got above freezing, so they were out. Started at dawn and worked to about 11 o'clock.
Oh, that's some devotion to his piracy. Got to start early. They always say the pirate's up and early, right? They got to steal the doubloons before everyone's awake.
Exactly. The early pirate catches the clam.
Yes.
I guess.
The early pirate stabs you in the throat and takes your doubloons as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading. And man, is this an Uncle Mike type of day or what? Oh, wait, no, my monitor is upside down too. Let me just flip it. Oh, yeah, this is, no, we broke the market, listeners. More precisely, the Fed broke the market. We were waiting for this for a while. You know, we were rallying into this Fed announcement for the last couple of weeks. It did seem to me like we were maybe whistling a little bit past the graveyard. There were a lot of other shoes still waiting to drop. And the Fed doing what everyone expected, doing the 0.5 point raise, not the 3/4 point raise. But of course, it's always in the guidance, the comments that come afterward where the market's looking for any hints into the future. And Powell not giving them a lot of nuggets to cling to for the bulls, at least. And so they, after vacillating around yesterday, the markets ended up down around 0.2%, somewhere in that range for the S&P. Today, they are taking it to the market. The NASDAQ off over 3%, 3.4%. S&P closing in on 3%, about 2.85% to the dark side right now. And the Dow off 2.75%. So we were hanging out 4,039.50 for a long time, listeners. Well south of that now, around the 38.80 level as we're kicking off the show here today. And, you know, you might be thinking, okay, this is my time, listeners. This is my moment. I've been loading up on VIX upside for a rainy day, and now is the day. Man, is it raining. And you would be underwhelmed. VIX kicking off the show a little bit shy of 23, 22.90, down about 1.6 points from where it was on Monday's show. Remember, at the end of the day, the Fed is kind of like an earnings announcement for the market, right? It's a bit of an event risk baked in there. So unless we get some crazy surprise, you're going to see vol actually come out a little bit, and that's pretty much what we've seen out there. Takes a lot to make VIX really go up and stay up, and not exactly seeing it. Even though net on the day today, we are up, going back to Monday's show. We are well below, because that was a weird time as well on Monday's show. You expect to see VIX get the weekend back, but it got a lot. It was in a 24 handle on Monday. So that was a bit of a weird moment as well. So we're seeing a little bit of weird flux. I think you can argue the 24 wasn't really merited on Monday, and maybe this 22 handle right now, maybe not merited either. So maybe the truth lies somewhere in between. VVIX reflecting a little bit more rock'em sock'em action now. Back up into the 90s, a 92, up 3 points from our last show. And then VXX still down 0.2 point at about a 15 when we kicked off the show. UVXY, you might be saying, okay, forget reverse split. UVXY is popping today, right? That's where we're going to see the action. Back up over a 10 handle. Forget reverse split. Nope, 7.5 when we kicked off the show. Down 0.2 point as well. So vol products don't give a crap about this right now. SVIX, our inverse friend. You might be saying, okay, inverse vol. That's what I want to have on a day like today, right? Nope, 14, up 0.2 point. You see where I'm going here, listeners. UVIX outpacing UVXY in its race to zero. 660 right now, down a whopping 0.3 point. And VolQ, our NASDAQ friend, 2580, also down about 2.8 points from where it was this time last. I got a feeling we're going to be chatting some more about VolQ in the new year, so stay tuned for that. I haven't checked it on NASDAQ vol in a while. Should be interesting to see what's cooking out there. Speaking of what's cooking, as long as his donkey cart and string are working, we might as well go out to him first. Mr. Rock Lobster, Powell came along and just kicked the market right in the groin, and we are all feeling the after effects of that now. What are your thoughts on Powell, the impact on the market, and the fact that vol could give a crap, sir?
Well, the vol was definitely not giving a crap earlier today. And it's still picking up. I guess, in my mind, as an ex-floor trader, vol goes up when you think the whipsaw is going to happen. And as of right now, that's not how things are priced, as far as I can tell. It's not, market doesn't care about the whipsaw going back up. The thought that we maybe rally 4% or 5% from here today or tomorrow, I think is kind of going away. And I think that's why, that you get the performance that you have from VIX today. Because I was looking at the straddle, it was like $210, 30-day straddle. And it's around the same. I mean, even this morning we're down 2%, and the vol at the 390, 3,900 strike was just down on the day. It might be picking up a little now, but there's not. We're like, okay. And I thought this was going to be. I actually wrote a post for this newsletter last night. Is without any where's our upside catalyst at this point? Okay, so the Fed is only not going to raise as aggressively as before. Okay, that's not necessarily a great upside catalyst, but they're still gonna. They have no interest in not lowering rates at all until inflation is licked, because it's still 7%. And I have to be quite honest with you, as we have probably said every time in this show, since the beginning of the year, all the problems that have caused inflation and market selling off and all that, nothing has changed. Government spending, still insane. Supply chain issues, still there, not as bad. Government mandates, still there, not as bad. All those things contribute to supply chain. Insane energy policy. We're buying oil from Venezuela now, still there. The Greens in Europe still are not backing down on their policy, although they are trying to do anything they can to basically get things rolling. So, somewhere along the line, in order for things to get better, as in more bullish outlook, we got to change the trajectory, and none of that has changed so far as I can tell. The only thing that might have changed is that Powell doesn't have to be as aggressive, because rates basically went from 0 to 4.5% in a year. So, that's certainly going to damp stuff down. You see housing starts to slow down and all, none of that stuff is good as far as economic growth goes. It's all going to make things a lot tougher. The Fed is no longer making money. They're actually probably going to have to ask the Treasury for money now. So the whole, finally people might be waking up to the fact that, wow, equities could kind of be a little bit dead for a while. Because I think there was some sort of, everybody's like, oh, we're getting right back to where we were again. I'm like, well, I think it's going to be tough. So I think that's what we got. So the fact that VIX is doing what it's doing, remember, it already started in the mid-20s. So it was already higher to begin with. So there's it's a harder road to slog now. And until, I think till you see better energy policy, sane fiscal spending policies, all the other things that could loosen the economy up, so to speak. Still haven't seen it. We're now a year into this year, and you haven't seen any changes at all. And is it going to be a wonder that stock prices are lower? And I want to say no. So I'm by my nature, I know it's hard to believe, but I am I am bullish over because I think the U.S. works for the most part, but right now. You need to see some policies change, and unless I'm missing something, I haven't seen anything change.
But we have seen a nearly 3% sell-off in the market now, so market's changing, at least as we speak, Mr. Rock Lobster. Yes, intriguing times out there now. I think, like I said, my My monitor is now the right way around, so I can officially say this is not an Uncle Mike type of day. I do believe he is shedding a single tear out there in the land of St. Charles. Mr. Uncle Mike, your thoughts on what Mr. Powell unleashed on the market and the reverberations we are seeing out there today, sir, mostly in the red?
Well, I think today is one of those days to where if you want to buy and you're waiting for your pullback, today's your day. But can you white knuckle it and can you handle it? So let's break this down a little bit.
So this is it. Uncle Mike has called it. This is the level. This is the BTFD level. Buy now or forever hold your peace.
Well, allow me to so let me take a straw poll of Mark and Andrew right here. Between you two, what number have I declared as kind of the magnet number for the SPX of recent months?
It was around 4,000, 3,950 to 4,000.
No, 3,900, baby. That was the number. 3,900.
Yeah. And so
I meant to say 3,900. That's what I meant to say. I'm better at guessing 180-day realized vol. Throw that stuff at me.
See, it's not so easy when you're on the other side of it.
Like paying attention to what Uncle Mike says. I got stuff going on over here.
Very true. Good point. So we've kind of reverberated back to this 3,900 level. And so to add to what Andrew has said, what has changed? Well, of course, we've had some upside and downside in the market, but have we had policy changes? No. Have we had any surprises with the Fed? Is there going to be greater interest rates? Are there going to be lesser interest rates? No, not really. It just seems like going into this, the market was kind of buying into, well, maybe they're going to have some type of announcement saying they're not going to raise rates as much as they thought they were, and maybe just give a little bit of relief to the economy because we don't want a recession. Come on, Fed, throw us a bone. And I think that's what some of the initial excitement was going into it. And by going into it, I'm talking about the rally that we've had over the last month or so. And from what it looks like, the Fed just said, no, you're getting nothing for Christmas. Powell and Biden are mad. You're getting nothing for Christmas because you ain't been nothing but bad. I don't know. I thought that was pretty good for just thinking of it on the cuff. But that's basically what the Fed said. And so from there, the market just said, all right, well, the heck's with you then. We're going to go back down to our 3,900 level, and we're just going to go to our room and pout, just like the angry kid does when his parents don't tell him he's getting what he wants. So the market's going back to its room and pouting right now, like an angry teenager would. 3,900 is an interesting level because you could argue it as a level of a little bit of support back in April of 2021. You could argue it as a level of support in around May of this year. You could argue it as kind of a level of resistance in June and July. You could argue it as a level of support in early September. You could argue it as a level of resistance in later September, resistance in later October, and now potentially support again in mid-December. So 3,900 has been a very popular number for the S&P 500 this year. And so it seems like when the market's not getting what they want, or they're getting sold off too much, it's just 3,900 is like the bedroom of the angry teenager when he or she wants to go and pout because his parents won't let him or her stay out later or do whatever it is he or she wants to do. Now, here's the part of optimism that I have in the marketplace right now. The pattern with which we have had in 2022 have been stocks and bonds moving together. So if something good happens, meaning, oh, wait, the Fed might not raise rates as much as we thought they would, stocks and bonds go up together. Or, crap, that evil Fed, they're going to raise rates. Stocks and bonds go down together. However, in today's sell-off, and as what's been happening in recent sell-offs, we've actually had the bonds not getting slaughtered like stocks have been. So back in the old days, and by old days, I mean a year ago, oftentimes whenever the stock market would go up, the bond market would go down because people are selling their bonds and buying their stocks. There is an appetite for risk. Or let's say that stocks are going down, bonds are going up. There's an appetite for safety there. So that's what happens a lot of times. Not every time, but a lot of times it does. However, because of interest rates throwing the great monkey wrench into the market with which they have this year, they've been moving in lockstep. But today, after the Fed just basically said you're getting nothing for Christmas and didn't necessarily say we're going to raise rates more, they did what they were expected to do. We actually have a slight increase in bonds today. Not a big one, but a very small one, which on a day when stocks are down and bonds are not also down, that actually gives me some reason for optimism and that we might be bottoming in bonds. So that way, if there is going to be some type of rally of some sort, then maybe bonds could go down a little bit, but maybe they won't go down that much because of the fact that the fear of the rising interest rates has already been priced in. So with that being said, reason for a potential delayed reaction on this would be that bonds have had their sell-off. They've had their day. So have stocks. But now it might be time to buy the stocks because the bonds might have reacted a little bit early in relation to the rally that may or may not happen in 2023. Looking at commodities today, we have a drop in my beloved silver. So we've had a rally in it recently, but we do have a drop in it today. Looking at crude oil, it's down, but not a ton. We have a little bit of a rally in natural gas, and by a little bit, I mean 8%. That's kind of like a normal day at the office for natural gas with how much that thing moves. And so on here, it almost, even though the market did not like what the Fed said yesterday, or I think it's more of a reaction of the Fed said what I think the market was hoping it wouldn't say, as opposed to the Fed didn't say anything unexpected. So with that, bottom line to all this is that if we are where we are right now, if 3,900 holds the support relatively, and nothing's ever exact, if we hold it like the 3,880 level or where we are right now, and the fact that bonds aren't getting royally slaughtered at this point, this might be a time to where the 2023 rally could start pretty soon. We will see. It's going to be interesting with everything that we have going on. And I also still don't like Bitcoin. That's what I'm seeing today.
That's why I love Uncle Mike. He can even turn a 3% down day into some positive spin out there, listeners. So if you're looking for a ray of light, a ray of sunshine here, you're a diehard bull and you're maybe feeling it a little bit today, just listen to that segment and that will cheer you up. Let's see if the rest of the market's numbers can cheer you up a little bit today, listeners. And VIX does like a good down day in the S&P. That usually translates into a little bit of paper, and that's pretty much what we're seeing out there, listeners. 608,000 contracts on the tape. Now, it's not 1M or anything like that, but when that compares to the ADV, which has been going in the wrong direction for the better part of the last month, it's now 525,000 contracts a day. So we're already blowing the doors off that. So that gives you some sense of how much paper is going up out there in VIX land today. Again, we'll break down all the paper flow out there on vol views tomorrow. SPY already at 6.3 million contracts, the ADV 7.85 million. So yeah, we're going to hit that in SPY today as well. The S, 2.05 million contracts on the tape in the S, the ADV 2.5 million for the S. I'm just doing my quick checkup, listeners. And it looks like of the top 20 here, 1, 2, 3, 4, 5. 5 of them only. So 15 of the top 20 are all expiring today. The other 5, guess when they're expiring, listeners? Tomorrow. So pretty much a 24-hour cycle is still dominating the top 20 trades out there in SPX. In fact, I'm going to hit Mr. Flowmaster's magic button. The biggest, most active non-daily contract we have going up there, which technically is a daily because it's going out tomorrow, is the 3,900 puts. 33,000 of those have gone up today, but everything else is pretty much all expiring today, all the time. Let's go out to small caps. Man, they are feeling their oats out there today. Let's see. What is IWM up to right now? It's off 2.65% right now, trading 1754, so well shy of even that 1800 level we were at on TWIFO last week. If you want more info on all things small caps, Uncle Mike's beloved silver, A spoiler alert, a little bit of energy. I looked at the numbers right before showtime, listeners, and right now all top 5 of the movers and shakers are all energy this week. So we'll get to some energy this week on the show as well. But right now, small caps, IWM, 842,000 contracts. If that sounds like a lot, it's because it is. The ADV is only 732, so we're heading back north towards 1 million contracts, both in today's volume and in that ADV again. And the Qs, not one to be shy in this type of market, 2.01 million contracts on the tape right now. The ADV, 2.61 million out there. Let's see if today is a day where, everything's all macro, all Fed. Everyone has forgotten about the single names. And the answer to that is kind of yes. Until you get to the top 2 or 3, everything else in this top 10 single names is pretty light, listeners. For example, it only cost you 164,000 contracts to break into the top 10 most actives today, listeners. That gets you to Snap, our old friend Snap. Not liking life today, 868 off 85 cents or nearly 9% today. It's not quite at its 52-week low. That was 733. That came, looks like, back in October. But not that far away from it, and certainly a far cry from its 52-week high of 49.25 that came back in December of last year. So rough year for Snap, off 81% on the year. We talked about them before. I won't belabor the point. 164,000 contracts on the tape. I've also said it before. It's kind of a quiet day when the old Alphabet sneaks into the top 10. And that's pretty much what we got today. Number 9, Alphabet. 90.25 is where it's trading, off nearly $5, 4.75, nearly 5%. So they're coming for Alphabet today. This one also still a little ways away from its 52-week low. That came back in early November 3rd. It hit 83 and about a third. We're 90.25 right now. So $7 pretty much exactly from its 52-week low. Good for 224,000 contracts today. Number 8 is Microsoft. 237,000 contracts today. This has been a weird one to watch. It's been pretty much rallying ever since the news broke that the Justice Department not going to look kindly on their acquisition of Activision. Finally taking a bit of a hit today, off 9.5 handles, or about 3.7%, trading right around 247.80 right now. This one also a far cry from its 52-week low. That also came not that long ago, just back on November 3rd, listeners. We were at 213 and about a half. 247.80 right now. So you can see what I mean by this one's been pretty much in rally ho mode for the better part of the last month and change, even though, again, a lot of the headlines haven't been that great. So it's been kind of fascinating to watch what's going on out there in good old Softy. Number 7, another M-related name, the artist formerly known as Facebook. This is Meta, good for 304,000 contracts. So we got to go all the way up to number 7 before we hit the 300K level. Meta back 115 and about a third, off 6.25 or over 5% today. The 52-week low a lot lower, $88. That was back when we did our poll, Amazon versus Meta. You all picked Amazon. And in the long term, I can maybe agree with that. In the near term, Meta has blown the doors off it, given some of that back now. Good for 304,000 contracts. Number 6, we are officially in the chip zone. That gets us to AMD, listeners, 361,000 contracts, 66.5, off $2.50 today. This one is about $12 north of its 52-week low. That was 54.5, set back in November. Actually, looks like it was October as well for this one. And then we've got number 5 going out to the content streaming side of the space. It's the old Flix, 402,000 contracts, trading 287 and about a third right now, off 30.5 handles, listeners, 9.5%. Man, they are coming for it, but you also don't need me to tell you Netflix still has a long way to go to even hit that 52-week low that was set back after that disastrous earnings back in Q2 of this year. That hit 162.75. Long way to go from that still, listeners, but also a long way to go to the 52-week high. Look how much living Netflix has done in the past year, listeners. 52-week high, 620.61. 52-week low, 162.75. My goodness, what a year for Netflix. Number 4, still hanging out in the chip zone. It is NVDA. Today, good for 407,000 contracts. Are they coming for NVIDIA? The answer is yes, off $9 and change, or a little over 5%, trading 167.60. This one also substantially north of its 52-week low that it set just about 2 months ago exactly, October 14th, 2 months in a day. It hit 108.13 that day, listener. So 167.60 is still well north of that. So if you're wondering how much downside there is to go, it was substantially south not too long ago out there, listeners. Number 3, the other half of our Amazon versus Meta poll. It's the Amazonians, 669,000 contract. This one, $88, still hanging out at about the range that it was when we did our poll, if not a little bit lower, whereas Meta has been off to the races. The actual 52-week low for this one, $85.87, trading $88 exactly right now, off $3.50, nearly 4%. So this one within spitting distance of its 52-week low out there. Number 2, I said it's not really an official red day until they turn Apple red. They're coming for Apple today, off 6.25. This is 4.3%. This is the most I've seen Apple down in a day in quite some time. Also, not that far away from its 52-week low again. Once it starts getting in the 130 range, that's when things start to get interesting for Apple. 52-week low, 129.04. They hit that back in that June sell-off, listeners. So we're still about $7 and change north of that right now, but heck of a lot closer than we were even a few days ago. We were kissing 150 just a couple of sessions ago out there in Apple, listeners. So it seemed like that for a little while at least. 52-week low was a distant memory. Now, within spitting distance of it again. So 1.03 million contracts for Apple. That means, number one, you know what it is. It's Tesla, Musk's other T-named baby. The other one seems to be just cutting his fortunes in half. Driving down everything, including his baby, which is Tesla. Musk no longer the richest person in the world. That's quite the shame. 157 in the third. Tesla actually up today, bucking the trend after a number of sessions where they have just been merciless to this stock. September 20th, it was 308, almost 309. It is 157 right now. So they have pretty much cut it in half just since September, let alone going back to earlier in the year when it hit 402, almost 403. So, yeah, this has been a rough time for Tesla. Even just a couple of weeks ago, it was trading right around 200. So they have come for it. People wondering whether his splitting his focus between Tesla and Twitter and everything else that he does and all the negative headlines, all the blowback from Twitter, all of that leaning on Tesla here, and they're really just coming for it. Even though today, bucking the trend. Of course, he dumped nearly $4 billion worth of shares over the week as well. That's good for 1.72 million contracts on the tape for Tesla today, listeners. Maybe we should do a poll out there. Tesla polls, you folks always respond to those. Are you done? You washing your hands of Twitter? Is this a buying opportunity for you? What do you folks think? Are you scooping? Are you buying with both hands like Uncle Mike? Hit us up. Let us know. In terms of earnings, it still is kind of light times, listeners. Oracle on Monday. Weber Grill and Leonard Homes are on Wednesday. Today, we've got Adobe. Tomorrow, we've got the Meatball's favorite dining chain, Darden Restaurants, as well as Winnebago's. So, if we're talking about Winnebago's, things are light. You can, though, check out all the previous earnings move result, earnings season, and earnings trades reports, as well as the new ones. There are new ones coming hot off the presses for you right now. If you want to see Nike coming up next week, you want to see CarMax, you want to see Adobe coming up after the bell today, you can check out all those reports for yourselves over there. TheOptionsInsider.com. Click on the Options News and Articles tab. Just because earnings season is dwindling down doesn't mean the data stops. The fire hose of free data that we provide to you folks continues nonstop and unabated over there at TheOptionsInsider.com, as the show must continue nonstop right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Let's do it. Let us commence operations. Let us unleash the Eye of Sauron. See where it fixes its fiery gaze today. And first, I was talking about how in the old TWIFO report coming up, top 5 all energy this week. We're going to talk about energy now, but maybe flipping the script a little bit. We're going out to NRG Energy Inc., ticker symbol appropriately enough, NRG. Talked about this one before. Obviously, energy company based out good old Tejas out there, trading 31.66 right now. Today, off about 0.75 of a buck, or about 2.3%. On the year, it's been more of a topsy-turvy year, as you might expect for anything in the energy sector. A year ago, it was trading $40 exactly. And then during all the brouhaha in the energy space, it hit its high for the year of around 47. It's like 47.82. That was on May 26th. And then they sold off pretty quickly down to $36 again on July 21st. Then they rallied it again, 44, almost $45 in September. And they kept up with that range. They were still trading $45 on November 11th. And then the last month has been pretty much straight down, selling off to $32 on December 9th. And of course, this next leg down to 31.21. They're not 31, I should say 68 right now. They're not quite at their 52-week low. Actually, they did hit it this morning. No, I take it back. They hit 31.52 this morning. Their 52-week low is actually 31.21. So they kissed it. I have to feel they put it in today, even though they're saying the low for today is 31.52. I got a feeling they kissed that 31.21 today as well. Either way, if they're not at it, they're 30 cents away from their 52-week low. So an interesting time here for NRG, which also brings up an interesting trade that we saw going up out here today. This has all the hallmarks, Mr. Rock Lobster, of our classic house money roll. We saw first 11,500 of the June 30 puts going up on the bid for $2.65. That's a pretty hefty 40 vol. And we thought, okay, pretty sizable put trade out here for NRG. Then we looked a little further and saw also at the same time 12,500 of the June 25 puts going up for $1.19. Pretty close to the offer there as well. Opening on the 25 puts and not opening on the 30 puts, which also makes us wonder. So we see this. We see what looks like a spread. We see more size going up on the second leg, 1,000 more contracts. That's usually the sign of a house money roll. So we sent our Eye of Sauron back to do a little bit of digging, and turns out that was the case. Those 30 puts were opened back on September 22nd when the stock was $41. Like I said, it's $31 now, listeners. So they had a nice $10 sell-off in the stock. So even though they went all the way out to June with their puts from back in September, it's not a really high delta put. Even those are going to make money in a $10 sell-off. They bought them for $1.23. That was a 43 vol back when the stock was $41 and change. And now today they are rolling them down to the 25 strike. So they did well. They made about $1.6 million on the 30 puts. Of course, they're putting that money right back to work, buying 12,500 of the June 25. So they're not done yet, Mr. Rock Lobster. They think the downside party is continuing. They're putting all the money they made and then some back to work, buying even more of the 25 puts, sir. What say you?
I have to say, like, you look at the energy company and like, hard to believe that it's had this much of a move down, but I guess so. I'm just looking at here, like for the last 3 months. I mean, I guess so. You had a $10 move, which is pretty bizarre for an energy company. Like, what the heck happened? I find this intriguing on this. But yeah, I mean, clearly they bought a lot of duration and they got paid handsomely for buying the duration. So hard to fault them when their stock moved down $10. So it does look like they just kept they did keep it up, and they're trying to score again, basically.
Looks like they may have also rolled on that same day, the 22nd. Looks like they may have also bought the Jan 28 puts back in August, and they already dumped those that same day, September 22nd. They dumped those out when they bought the June 30s. So they've been making money on puts, it seems like, for a little while out here in NRG. And it doesn't seem like they're planning on stopping anytime soon, putting all their money back to work on this house money roll here. Are you surprised by this downside, the way the Rock Lobster is in NRG listening? You think this person is maybe throwing bad money after good in this sense? They should have taken their money and run. I'm curious. Hit us up. Let us know what you think on this pretty sizable house money roll. We'll keep the put party alive, listeners. Let's go on out now to everyone's favorite TAL Education Group, ticker symbol appropriately enough, TAL. It stands for Tomorrow Advancing Life. The Rock Lobster and I have some unpleasant familiarity with Chinese-oriented education ADRs. We played in a few of them over there on Options Oddities, most infamously EDU. If you want to know what we're talking about, listeners, check out the Pro and go check out the archives of Options Oddities. The Rock Lobster and I have gotten up to some interesting business in EDU in the early part of that show. Now we got TAL coming in. We talked about this one before, but it's been a while. Up about 45 cents, trading 644 right now, so a 7.5% pop. So a nice little pop here for TAL today. On the year, it's a similar story. A year ago, it was trading $4.37. Then they came for it. The stock got crushed in March all the way to $1.60. Remember, there was a lot of concern about what was going on in China, what was going on with these online education companies. It seemed like China had pretty much just killed the entire sector, said we're not going to support it. And then maybe that's been backing off of late because this stock has roared to life ever since March 14th. It has shot up, went from $1.60 up to, it hit $6.57 back on August 29th. And then it sold off again down to $3.26 in October. So did a lot of living from in August to October. Then ever since October 24th, it's been rallying hard again from $3.25 all the way up to its high for the year of $7.20 around December 9th, and still hanging out $6.44 right now, listeners. But it seems like, Mr. Rock Lobster, somebody taking advantage of this rally to perhaps come in and aggressively fade this recent run-up in everyone's favorite Chinese education name, TAL, because they picked up 3,324 of the May 7 puts. So in the money puts, that means they're not messing around. They paid $1.68. They pretty much lifted the offer. The offer was $1.69. They got them done for $1.68.5 on splits, listeners. That's almost a triple digit vol. That is a 97 vol. Wow. Impressive. Looks like actually the 720 print, I take it back. The 720 print came today. So this stock has been whipping around. It hit 720 this morning. Got as low as $6. This thing is at a $1.20 range just today. So, wow, interesting. So the high actually wasn't on December 9th. It was today. That was 661 was the high back then. So, yes, this thing has been whipping all over the place. And where was the stock when the stock was almost $7? The stock was $6.96. So this one passes your first Rock Lobster snip test, Mr. Rock Lobster. The puts are looking good. The stock has moved about $0.50 in their direction. They liked it so much they've come back and done more. A total of 4,500 have traded now. So Mr. Rock Lobster, they're not playing. They are fading this stock to hell and high water to the tune of 4,500 now. These May 7 puts, sir.
Well, you look at this and you go, oh, okay. Wow. Somebody's not believing the fact that this stock has rallied and that the Chinese government can't possibly just turn the spigot off again. Is that what you're telling me with this particular trade?
I find that very hard to believe and highly dubious, sir.
It's very dubious. So, you would think though you're buying those May 7 puts and it would be hard to get any action out of them, but I mean, right away today, they're making money. So, I mean, it passes the sniff test. Huge fail. I mean, the stock was $7 this morning and now just, it looks like it's on its way back to unchanged for the day. So it would appear earnings that they had be danged. The stock is just kind of go back to on its way back to Palookaville. Or it could be, it's, obviously it could be a hedge, some kind of hedge where they picked up the stock for a cheaper price. But I think as of this writing, it looks like a straight up put buy and another 1,000 of those puts traded as well. So, just doing a little fade here is what it looks like to me.
By the way, speaking of Palookaville, or perhaps not anymore, I'll give you a hint. Guess where our old friend EDU is trading right now?
EDU, $1.50 again? Well, 10 for one.
That would be awesome. $33.
Wow.
Yeah, I think it split like 20 for one. It did a crazy reverse split, but still, yeah, it was hanging out in the 20s for a long time. Now $33. So they are liking themselves some EDU, up from $10 in May of last year, split adjusted, obviously, all the way to $33 right now. So I guess all is right in that sector.
That's a power move. So let's see. Did they buy any puts in EDU though? Of course, they're somehow showing that they were able to make some kind of money after losing all of their business. But, clearly a power move.
Someone's buying the 35 puts in EDU today 700 times.
So that would be our $1.50 stock would be $3.
So that's probably our same friend who's loading up on the TAL puts. They bought 700 of the Dees 35 puts this morning, paid $1.30. That's the same MO. They're in the money puts. Yeah, interesting.
Yeah, I don't think they're thinking this rally is short, and I could see where, if China starts to do something, with all this it's back and forth with all this lockdown noise, they would actually, if you think about it, it is possible that they might go to some kind of remote learning. And they would need these companies. So I don't know. I think interesting, very interesting to say the least. A little.
These EDU puts went up 12 minutes after the TAL puts. Same MO, different size, obviously, because that stock a little bit juicier. But in the money, that stock was $2 higher when they bought those puts too. So they're looking good on both put scoops here, which is interesting. So fading Chinese education, at least for right now, is the play. And let's get out of here on this one. Let's go out to another name. This is one we haven't talked about in a long time either. This is Huntington Bancshares Inc., ticker symbol HBAN, HBAN. This is a bank holding company out of Ohio, trading $13.66, off about a quarter, nearly 2% today. On the year, a year ago, it was trading 15 1/3. Got up to their high for the year in January of $17.79. That was kind of all she wrote for most of the year until July. Then they hit their low for the year of $11.67. And then the latter half of the year, they've actually looked better. They've rallied from $11.67 all the way back up to $15.50 on December 1st before selling it back off to where they are right now, $13.66. And looks like Mr. Rock Lobster, we got someone coming in saying, I don't think they're getting back up there anytime soon, at least not before February expiration, because they blasted out 3,180 of the Feb 15s for 18 cents right off the biz, about a 28 vol. The stock was a little bit higher, 13.71 when they did this. Worth noting, it is going ex-dib now too, so always look at options volume and ex-dib names with a little bit of grain of salt. But there are earnings in between now and Feb expiration. The next one is on Jan 19th. So they are overriding these calls through an earnings cycle as well, which is a little bit more dicey. Mr. Rock Lobster, sir, what say you? Someone getting a little bit of the old risk premium to the tune of 18 cents, 3,200 times in your new favorite name, HBAN.
Yes, it was Huntington Bancshares, HBAN. I believe this has crossed our radar before, this stock. Well, I'll tell you what, they don't like these regional banks very much all of a sudden. If you look at this is, interesting, probably some kind of overwrite. So they're looking for 1% out till February the 15th. I guess they're just trying to pick up the recent high. Again, not unreasonable, although I hate selling any option for less than 25 cents. It's my personal rule. I'm like, 25 cents. I'm just I try to avoid that if I can. But I mean, it looks like if you're looking for yield and on a buy right, it's still, hey, it's money that's better than nothing. If they get taken out of 15, they're picking up the 3-month high. So they're not going to be unhappy with that.
Indeed. Let's see if you folks are happy or unhappy with our question of the week, because it is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. You folks ask questions. We often turn the spotlight back on you like we did this week with our question of the week. A very timely one. We asked you, which option strategy have you used the most in 2022? Again, if you don't see your favorite, you can always write in your favorite. We've had some interesting write-ins. Most notably, it seems like for strangles and straddles. So If we had a fifth slot we could use, that probably would have been a popular selection. But we gave you 4 choices this week: butterflies and condors and your spreads with wings, your long calls or your call spreads, your long puts or your put spreads, or your short puts and put spreads. Uncle Mike, we shall start with you, sir. What is your choice, and then what do you think our audience is choosing, sir?
I'm going to go with, how can you not want long calls anywhere? I mean, who wouldn't want to do long calls? So I'll go with that. And then for our audience, I think that there are a bunch of degenerate premium sellers at this point, so let's go with the condors.
Interesting. Mr. Rocklop, the same question for you. What is your choice if you have one, and then what do you think our audience is choosing, sir? Oh no, the donkey cannon string have broken.
No, it all went down. It all went down. I think still which strategy most. Oh, okay. I think long. I'm going to say long put and put spread is what everybody said in 2022. And boy, what did I do here? And I'm going to say probably my best one was long because I did a lot of SPY puts and VIX puts. So I'll say long put and put spread as well.
Interesting. You would think that would be running away with it given how the year has been, right? But no, it is short puts and put spreads, 32.1%, taking the lead. It's a lot of our folks nibbling out there using the old short put to do so. Number 2, we got long calls and call spreads. So betting on a bit of a rebound, maybe 26.8% of you. Followed by number 3, all your spreads with wings, your flies, your condors, etc., 23.2%. And bringing up the rear, no love for long puts or put spreads, only 17.9%. Get in there if you haven't voted yet, listeners. You got about exactly a day left. So all you folks listening on demand on the podcast, you will have time. At Options is the place to go on Twitter to make your voice heard. If you don't see it at the top there, just scroll down a little bit. It'll be there. We try to retweet it as often as we can, so folks who come around later in the week can also play along. Let's go to this one from MK. He's got a question for you, Uncle Mike. He wants to get to the heart of an issue. He says, what is the real reason that Uncle Mike hates crypto so much? So, Uncle Mike, sir, MK wants to know, what's the deal? Why do you hate crypto so much?
I don't hate crypto. I love crypto. I don't think you can buy enough of it.
Okay then. Who are you and what have you done with Uncle Mike?
Okay, I just kidding on that one. I actually really do like the blockchain technology that goes along with crypto. I like how it works, and I do think that people who have real money, i.e. the federal government and the European Union and things like, and just people who deal with real money are going to adopt that type of a system at some stage, the blockchain technology that goes along with it. So I'd like to go on record yet again for saying that. Crypto, however, it was kind of interesting in that it's fake money. And so there's a bunch of conspiracy theorists out there that decide the government's not real, man. We're going to make our own money, man. And that's just essentially how crypto came about. And so with that, the concept of crypto, well, it's intriguing, it's interesting. The real reason I don't like it is because the intrinsic value of it is zero. Now, the crypto bulls would say something along the lines of, the U.S. government, since we've gone off the gold standard, it's funny money. Well, yes and no. Yes, it is not on the gold standard anymore, but our money is backed up with something. It's backed up with the greatest fighting force in the world, and that's the United States military. And so from there, that's what backs it up. Whereas crypto is backed up by nothing. And so that's kind of the reason I don't like it. So I guess to sum it up, the reason that I don't like crypto, the intrinsic value of all of it is zero.
So you're saying, Uncle Mike, that I should cancel the Christmas gifts I have for you and the Rocklops. I put in pre-orders for the beautifully designed brand new crypto hardware wallets designed by the guy who created the iPod Nano and everything. Beautiful $300 wallet. You're saying I should cancel those for you guys? You don't want them? No use for them?
I would like anything you'd give me, Mark. It's it's the thought that counts.
Too late. It's going out to other folks now. You guys are off as we keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do it. Let's go around the block, see what we're keeping an eye on until our next episode. Mr. Rock Lobster, the Fed's behind us. So what is left to watch, sir?
I say what like Mike says here, that you got this 4,000 is the new resistance. 3,900 is like the gravitational pull. And as far as like headline numbers go, I think the market's just going to become a market of stocks until the next February Fed meeting. It is what it sounds like to me. So, when you look at it and you stack it up like that, I think we sit and we watch what's going on, to be quite honest. So I am not looking one way or the other at stocks. I just think we kind of move around a little bit. I thought when we were on vol views last week that we'd see a lower vol because the Fed said exactly what they were going to say. And I don't think it was a surprise. So it's a little funny that the market's reacting like it is at this point. I guess they were hoping for unicorns and rainbows, and they didn't get it. So, and I think we're just going to slap around here for a while, like I said, until there's actually substantive policy changes that make things better. And I mean economically better. So I think this 3,700 range to 4,000 or whatever it is, I think we're kind of stuck in that for a while until something improves.
Mr. Uncle Mike, same question for you, sir. What are you keeping an eye on until our next show on Monday?
Well, it's interesting right now because it's such a Fed-based market. And so I think just any macro news that comes out is something that could move the market. I don't think we're going to have a big moves in the market if XYZ stock comes out and has a good announcement or something like that happens. I think it's going to be a snoozer to the market. Everyone's just going to be waiting on what the Fed's going to do. And until that time, I think we're just going to be kind of plopping around a little bit, for better or for worse. And just watching the 3,900 and seeing how far away we can get from it. And that's what I'm watching.
And that music means no more watching on the show today, listeners. But before we go, let's go back around the horn, see what each of our compatriots have that may interest you. Let's start with the rockingest of lobsters. Mr. Rock Lobster, sir, if folks want to check you out, where should they go? What should they do?
Member call Ted or other Andrew, 888-trade-01. And tonight on Thursday, I launched my easy button, which is putting on trades for edge. So all the trade ideas we send out, and the method will be a vol-based edge trade, and with an instruction on how to trade and manage it. It's going to be pretty cool. It'll be unique for our industry. Or you can try my Spy Master, which is doing quite well.
The easy button. I like that. So watch out. Office Depot, Office Max, they may sue you. Don't they have an easy button too?
Yeah, yes, I know. But I think they're gone. Aren't they gone?
One of them's gone. One of them bought the other, I think. I can't keep track of the office retail space. But if you want a better easy button than the Office Depot /Office Max, anyone can buy an office chair. Hit up the Rock Lobster. He'll tell you how to maybe buy some puts and maybe make some money with it over there, optionpit.com. And Mr. Uncle Mike, sir, if folks want to reach out to you, where should they go? What should they do?
You can follow me on Twitter at Mike TOSAW, TOSAW. I try to put out a lot of content. You can also visit my website, stcharleswealth.com. The year is getting close to an end, so if you have questions on should I sell this, should I do this based on the tax man, give me a call. Check out my website and get my information. Reach out to me. Happy to have a conversation.
Check them out, stcharleswealth.com. That is going to do it for the option block today, but don't worry. Coming back for TWIFO in just a little bit. All you pro folks hang out, give you some fun content, and the live stream will be back in a little bit with our guest, Mr. Rich Excel, the professor of finance over there, University of Illinois, Holden Court in the School of Business there. He's been on the show in the past. He has always some interesting trading ideas. Remember, he had those time butterflies and the ags in the past. So always interesting fodder for trading. So stay tuned for that in a little bit. If you're listening after the fact, that'll be coming up on the network after the old option block. Tomorrow, vol views, noon central, followed by options oddities 2 p.m. Central. And then after that's, of course, for the pro folks. And then even more for you pro folks after that, another pro Q&A, because it is double pro week with the Unklest of Mikes, Mr. Uncle Mike TOSAW. So get those questions in now, folks, if you are on the pro side. If not, theoptionsinsider.com/pro is the place to go. We got to get on out of here. Back again, like I said, for Twifo in a little bit. Then back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.